Good morning all, CamelbackTrading.org coming to you this Monday morning, September 20th. We're looking at Window Trader's market profile of SPY IWMN triple Qs. And we haven't seen this in a while, have we? Are we surprised? Well, not really, especially how we closed on Friday. But let's go to a couple things. Let's start with triple Qs. So they're looking to gap lower. Now the triple Qs, they're still one time framing up on the monthly. Last month's low is 359 and change, so they're still $8 away from that. So yep, ugly start to the day, but their monthly is still intact. But again, they're only one time framing up 4 or 5 months as opposed to SPY. Russell, inside day on Friday, going to have a fairly large gap. Again, there's 75 minutes to go. A lot can happen, but possible gap down out of an inside day. Now, in the bigger picture, nothing is changing for them. Remember, they're in March's range for 6 months. So 207 and change. That's another $10 lower, right? That they would have to take out to come out of balance to the downside. Now, let's talk about what's happening in SPY and ES. So we've been talking about, we said on Friday that the 50-day moving average has been a crowded trade. Traders will do what's worked until it doesn't work anymore. This has been like this 50-day moving average trade has been the 500-pound guy jumping up and down on the trampoline. They've bounced off it how many times all year? Well, at least now they're going through it. So there's a lot to keep in mind here. We talked about this last week. I said we took out the previous month's high. I said when things look like it was changing a bit, we have to keep in mind of possibly taking out last month's low and possibly having an outside month down. Well, right now, we're looking, again, it's only pre-market, and we have 75 minutes, but there's a chance of taking out last month's low for the first time in a year. If that's the case, we come into monthly balance on the monthly. Now, that's healthy. There's nothing wrong with that. We have 9 days left in this trading month, and there's a lot of things happening in this trading month, specifically the Fed on Wednesday and the end of the quarter a week from Thursday. So we can have so much happen here how we close. Do we have an outside month down? Do we have an outside month up? Or do we just close inside of last month's range and end up with a nice 3-month balance? It all remains to be seen. If we do get any acceleration below last month's low, the next monthly low is a poor low. Still $12 away, but it's a poor low. Remember, we've had tight ranges last week, right? They finally stretched it on Friday, but it was pretty tight. And now look what we're doing this morning. We're looking for, possibly a $5 to $6 gap. Volume over I think it's 2.5 million already. So these are all things now. What would have been the nicer trade is to have come out of Friday's range to the downside and one time frame down and have a trend day down to this point. That would have been nice. But again, the market doesn't care what we want, right? The market does what it wants to do. You will have every uneducated trader screaming gap rules apply today. And you're going to hear me and anybody who's followed these videos or in my room know gap rules apply in context. In context. And right now it's a fairly large gap. So we're going to have to see if we want to take a put play right off the bat or see if there's an inventory adjustment to take a long against it. Right now, last month's low is 436.10. We're $1.40 below it. But again, with 75 minutes to go. We've even traded below another weekly low and filled that small gap pre-market. But again, that doesn't count pre-market. So if you do get acceptance below last month's low and below that gap fill, again, there's not much below us. We have a bunch of daily lows. But let me tell you, and there's the big trend day from July 20th down in the 430 range and 429 and change range, which is still $5 lower. But if that is the only line of defense for the bulls, more than that poor monthly low, you never know, could come into play. But let's not get ahead of ourselves. Let's look at what's happening now. As far as numbers, now, right now the overnight high is 441.55. So we don't have anything until the gap fill, which is Friday's low, 441.02. So until we get more MGI, we have nothing for $6 to the upside. That's something to keep in mind. Right now, our pre-market low, let me just get it updated, is it's trade 434.34. 434.34 is our pre-market low right now. Now, as far as other destinations on the downside, so the monthly low is 436.10. Then you have 435.99 weekly low and fill in the gap at 435.72 from the 23rd. 433.69 daily low, 433.62 9 wide from July 21st. 433.41 afternoon pullback low from the same day. And then 432.14 daily low. And I'm going to give you these single prints from the 20th. Please write them down so we don't continually go over these. 430.73 to 56, 429.83 to 47, and 428.80 to 39, 424.83 daily low, and 421.97 monthly low and poor low. So please write those all down so we don't have to go over them. So the game plan for this morning, well, again, opening on a sizable gap. Excellent volume, over 2.5 million with 75 minutes to go. Can you get an inventory adjustment? Of course you can. The market's short. Think about it. Here's Friday. Look how we closed on Friday. Right? Yeah, they tried to rally it, then they pushed it down. So the market's short. Yeah, it was a B shape for only long liquidation. But that doesn't mean you can't bring in new sellers, just like sometimes a P shape could bring in new buying. Is this short-term sellers? Is it longer-term sellers? Still don't have the answer to that. We've been playing mainly against short-term players. We'll see what happens. Sizable gaps to the downside have not held in this market. We know that for sure over the years. So let's see what transpires this morning. As far as the game plan, again, if you take a long here, there's really nothing to lean on, especially below both the monthly and the weekly gap. You know, if you're going to just take a long because we're down $7, that's not a reason. We'll see if we do get an inventory adjustment. On the flip side, because the gap is so large, you might get that inventory adjustment. Maybe there isn't a short right off the bat. So I might either watch or, believe it or not, look for a straddle if we open at the 434, 435 level, and then all I need is volatility. So until I get more market-generated information, because there's nothing specifically to lean on, I would possibly either wait or look for the straddle as my only play. And then on the chart, so here's the monthly. We're looking to stop one-time framing up for the first time in 11 months with a possible outside month down. Again, there's so much time left in the month, we can't say that's going to happen. But it would be putting us into at least a 2-month balance and or 3-month. We'll see how much we get into July's month to determine how I want to call that. But until we take it out in regular trading hours, it's up. You never know what could happen. On the weekly, we're going to have a gap down on the weekly. The weekly went to down last week, right? 3 weeks ago, we were up at an all-time high. We went to balance the following week. Last week, we went down. It continues down with a gap lower. So 436.10, right? So here's a weekly low, 436.12. That would put you in a place where, hey, maybe they could find something. But if not, your next real big destination becomes 421.97. Remains to be seen. So the monthlies looks like it's coming into balance. The weekly's down. We're looking for a weekly gap lower. And the daily went from balance to down on Friday and will continue down. So again, things are starting to change here in the bigger picture. Keep your powder dry. Come check us out at CamelbackTrading.org. We'll lead you through these volatile times. Good luck trading today, and we'll recap at 4 p.m.